Hello everyone, welcome to another live stream. So let me just check if the camera is working, or sorry, the audio. Yeah, it is. Okay. So this one is on a Thursday, and the reason is that I was busy on Wednesday. I couldn't make the live stream, but I may even switch the whole live stream from Wednesday to Thursday at this time. I think it can be interesting. FX Wolf, what's up? How are you doing? Why do I like Thursday? Because there's usually some news in the markets, and usually the markets create some nice moves, and maybe there's gonna be even more viewers on a Thursday. Hey James, good morning. Good morning to you as well. Ryan, what's up? Good evening from Singapore. Good evening from Croatia. um, FX Wolf says that he's good. Great. What's your take on Euro Japanese yen? We'll take a look right now for sure. So hope everyone is doing well, and let's do an analysis for this Thursday evening. So let's check it out. I don't have anything on the watch list just yet. We're going to do a fresh analysis, and let's see if there were any news events. So there was this ISM services PMI, or actually, is it coming up? I'm not sure why the actual number is not here. Let's check on the Forex factory. So if TradingView news doesn't work, then I go to Forex factory and I go to calendar and today's date. So today is Thursday, October 3rd. And we had, yeah, okay, so the number came in much bigger than the forecast. So the forecast was 51.7. The actual number was 54.9. And if I click on the little document thing, it says that the actual greater than forecast is good for the currency. So that means that for this right here, it should be good for the currency. This news right here should be good for the currency, for the dollar currency, I believe. Yeah, so this is dollar news. So it makes sense that we had a bit of a bearish reaction right here. Since it's good for the dollar currency, so the euro currency will go down, dollar will go up. Not a big reaction though, just trickling down. Ryan, any discount for Zentum trading? So currently we aren't running any discounts. Christmas is approaching, end of the year is approaching, and there will for sure be some discounts at the end of the year. So if you want to wait a bit, you can. If you want to join right now and then cancel your membership right before Christmas, get a discount, you can do that as well. But currently, unfortunately, we don't have any discounts running. And let's first do the euro and the Japanese yen for FX Wolf. So on this 1 hour chart, any news? No, not really, not really. Tomorrow we do have NFP, non-farm payroll. Currently a bit flat right here, okay? A bit flat right here in this area. We did have a nice move up right here, a nice momentum going up. Pretty big move as well, pretty bullish move. I like these candles right here. A little bit of a slowdown, but then we continue. Possible flag was forming. If a flag formed here, I definitely would have taken it. But then, unfortunately, no flag formed. We broke the high. At one point, this was printing a very nice bullish close like this. So it was a clean close on the top. And after that, I would have definitely looked for a setup. Let me just check the current volatility with a 12 pip stop loss. Tiny. So the volatility is pretty high right now. I think I would have used a 30 pip stop loss. Yeah. So if a trade formed, I would have probably gotten in with a 30 pip stop loss right here in this area. Yeah, but printed a huge wick. So that's a sign of a range bound market, and that is exactly what we got. We got a bit of a range bound market right here. So now I'm just looking for a large push up or a large push down. I didn't take any trades. You may have been looking for a reversal right here. I personally wasn't. There was a little bit of an ascending on the top. The reason that I wasn't looking for a reversal setup, that's a very common pattern that pattern that we trade, basically an ascending structure, and then a push down like this, and then a sell setup. The reason why I wasn't looking for that is because the ascending was not clean enough. Okay, so this formation was not clean enough for me personally. I wanted to see more consecutive breaks of the high. I wanted to see more corrective price actions. So this one did not fit my plan. It was not clean enough for a reversal setup. So yeah, then we had this range bound price action, pretty flat. And currently not on the watch list, not printing any high probability patterns. So James is asking, have you ever used a Monte Carlo simulator? I personally haven't. Is that for risk management? Let me just Google it quickly. Monte Carlo simulation. Okay, so it's a probabilistic model that can include an element of uncertainty or randomness in its prediction. Okay. So this is what I found. I'm going to put it in the comments. I think FTMO does offer this sort of a simulation on their website. So if you make an account, if you sign in, and then they have this sort of a Monte Carlo simulator where you basically give them the parameters of your strategy. So let's say you have a 30% win rate and your average risk to reward is 1 to 5, and then they run 100 simulations, and then you see exactly what can happen. So to your equity curve, for example, any losing streaks, any slow periods, any drawdown periods. You get 100 simulations of your strategy with the parameters that you put in. So it's 100 trades, 30% win rate, average risk to reward is 1 to 5, and then basically it draws a huge number of simulations. And I think I did that. I think I did put in the numbers in the FTMO calculator, and it works pretty well. It draws the lines pretty well. Interesting to see. You see again the slow periods, the losing streaks, and everything like that. But I don't find a lot of value in it. I think I find a lot more value in just pure backtesting, because backtesting is a simulator in and of itself, right? So if you backtest the last 5 years, you're gonna get some sort of an equity curve, and it's gonna be much more representable than the Monte Carlo simulator, because it's gonna be on actual data. So I think that sort of a simulator is much better. And if you want to backtest the last 5 years and then go back to 2010, backtest 5 years again, so 2010, 11, 12, 13, 14, that is pretty much a lot more valuable than just putting your statistics in a simulator like this one. Okay, Ryan says, I'll wait for Christmas then. Yeah, sure, if you want. We will for sure be running a Christmas discount, so you can wait for that. And when is Black Friday? I need to check that out as well. Maybe we'll run a Black Friday discount if it hasn't already passed. Back to the charts. Euro and the Japanese yen, again, not on the watch list right now. We're going back to the euro and the US dollar. We do have major news coming up. Okay, non-farm payroll. You can see the forecast is pretty much similar to the previous number. Unemployment rate. So these two are very big, very volatile events. Again, we're very careful during NFP. I stopped trading on a Friday. So 2 a.m. in the morning on a Friday, I stopped executing new setups, because on NFP, the volatility goes up. There's a lot more movement in the markets. Spreads go up as well, and you can get taken out for much more than you risked, right? If we find the last NFP, so let's go back to September. Usually NFP happens on the first Friday of the month. See here, non-farm payroll, and you get this. Very volatile move. Again, even the buyers get taken out, the sellers get taken out, all of the stop losses basically get activated. So you need to be really careful. And that is exactly why I stopped trading, because let's say I executed a trade right here. I don't know, this was 5 in the morning. Let's say I took a buy setup right here with a 10 pip stop loss. For some reason, of course I wouldn't, because I don't see anything high probability right here, but let's say I took a buy setup and then this candle took me out, right? This candle took me out. It would have taken me out for much more than I initially risked. And it has happened to us. I think we got taken out for 4 times more than we risked. So you need to be really careful with NFP. It is the most volatile news event, I would say, at least in my personal experience. James says, okay, we have Ryan first. Would you be able to share about what defines an impulse? 2 strong candles are enough? Yeah, sure, that's a good question. For me, I make a visual assessment. So there's no black or white conclusion what is a good impulse. You cannot really put it into words. It requires a visual assessment and experience. You get that experience from backtesting. A general rule of a good impulse for me is, let's say, 2 or more large candles. And I mean large bodies. See, so I would say I would define this as a nice impulse. You have 3 candles, large body here, large body here. Here it's okay as well. And there's a clean close right here, clean close right here. So the more wicks there are, the less of a good impulse it is, right? And here there are very minimal wicks. Here the only wick is right there. On these candles, the wicks are pretty small and pretty insignificant. So a general rule of a clean impulse, let's pick another one. This one. This is a clean impulse going up. Big bodies of the candles, wicks just here and here. Rest of the candles have clean closes, as you can see. So that is pretty clean. Another one right here. This one is pretty clean as well. Big bodies of the candles. Wicks, this one is a bit more wicky, but it ended with a nice clean close. So you want to see at least 2 candles. You want to see large bodies on those 2 candles. So for example, this one, and you want to see minimal wicks, and you want to see a clean close on most candles. So a little wick or a clean close. This is a clean close. This is a little wick, little wick, little wick, little wick. So that is the general rule that I go by, but that is all taken from backtesting. So all of that experience is what I learned in extensive backtesting. Hope that will help, Ryan. And in Zentum, so once you join, you're going to get our trade gallery, right? You're going to get our backtesting trade gallery for the last 3 years. You're going to get all of the high probability trades that we took. And you're going to see exactly what constitutes a strong impulse, because each trade has a comment where we write down exactly what is good about the trade, what is bad about the trade as well. So that should help. That resource, I think, is extremely valuable for you to see what exactly we are looking for in the markets. James says, thanks for the help, Marco. That's great information to know. Yeah, no worries, James. Very interesting questions, and definitely keep them coming. Okay. Thank you for all the questions, guys. I definitely want to make these live streams a bit more, let's say, active, and with more questions, with more interaction from me and the audience. That's the whole point. That is why I'm not just filming a trade recap. That is why I'm doing a live stream, to make it more interactive, more fun, because the filming of the recap is pretty boring. Euro and US dollar. Did I take any trades on here? No, I did not personally. We started to descend, so this current structure is looking pretty descending. Okay. As we can see right here, pretty descending. Now that is a sign that the markets are more likely to go up than they are to go down. So this is a common pattern that we like to trade. It is called a descending channel. Usually this happens after that sort of a pattern, right? We get a strong uptrend. How do I know it's a descending channel? Well, I'm looking at the lows, and each time we break the low, they are being broken very correctively, right? So focus on these areas. This area right here, corrective break. This area right here, break and retrace. Here, break and retrace. Here as well, break and retrace. So each time we break the low, we get weakness, which is a sign that the sellers are not that strong and that possibly the buyers are stepping in and gaining control. So my forecast, my game plan is going to be for the price to descend a bit more, maybe clean up a little bit, because right here we're breaking the lows, highs, lows, 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 highs, 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 lows. And when I'm looking for a clean descending channel, I want to see only the lows being consecutively broken. So I would like to see the channel clean up a little bit, start to break only the lows, and then I would look for a nice push up like this, and then a nice high probability buy setup. Okay, so that is my game plan on the euro and the US dollar. I want to see the descending cleanup, I want to see reversal, and then I'll be looking for buy setups. Is it going to happen this week? I don't think so. I don't think it's going to happen this week. It may happen tomorrow, but tomorrow is NFP, so I stop trading at 2 a.m. Friday, right? So if an entry will form, it needs to form in the next 8 hours, something like that. Yeah, and basically in the next 8 hours. I don't think it's going to happen in the next 8 hours. It's not looking very promising, but still, to be honest, I'm going to put this pair on the watch list. I do kind of like the overall look of the descending, so worth putting on the watch list. Next one, Aussie US dollar. Ryan says, thank you very much. Enjoying your videos. Thank you, Ryan. Thank you very much as well. I'm glad you like the videos. And yeah, subscribe if you wanna look at more videos. If you want to get the notifications of when the live streams are happening, it's best to follow me on Instagram. Okay, so there's gonna be in the description a link to my Instagram, and on Instagram I actually post when the next live stream will be. You'll get the most recent updates. Okay, and you'll get some more videos as well, because I do make some reels on there. Aussie US dollar. I didn't take any trades. Price was looking pretty ascending here on the top, right here. You can see each time we broke the high, we were looking pretty corrective, and there was a lot of weakness in the market. Unfortunately, a clean reversal setup could not form. I didn't get a high probability sell setup, so that's not good. Nothing really fit the plan. Okay, nothing really fit the plan. We broke the low, huge wick, retrace, continued moving down, but again, pretty correctively. Right now, we did have some news. We had the balance of trade that didn't have a big reaction. We had the PMI, which came, okay, now it updated. Now it's 54.9. See, it's much bigger than the forecast. And that is a signal that the dollar is actually should go up, and the Aussie US dollar should go down. That is why this candle is bearish, but it's not a big reaction, to be honest. It's really not a big reaction. How do I know it's not a big reaction? Just the size of it, a visual assessment. Okay, it's pretty small. It's pretty irregular compared to the prior price action. And I'm focusing on the last 5 days of price action. That means the last 5 times 24, the last 120 1-hour candles, right? Last 120 candles is what I'm focusing on. That's the general rule. And you have NFP coming up. It's going to have a big reaction on all dollar pairs and even on the Japanese pairs. It just has a big reaction on everything. Right now, this is descending. We have 1, 2, 3 consecutive breaks of the low. This candle, unfortunately, did break the high and the low. So this is a descending channel, but it's not the cleanest. It's not the cleanest formation. It's not looking the best. I'm going to be more patient with the Aussie and the US dollar, okay? It is not looking that promising. I'm really not going to put it on the watch list either. Euro and US dollar looks much better, to be honest with you. What I would like to see is I would like to see this price action continue descending and then push up, and then to get something like this. That would be high probability. That is going to be on my radar going into the next week. Until that happens, I will be more patient on the Aussie and US dollar. AJ, now there was a very interesting trade on AJ, but let me see the last Wednesday. was around here. That was the time of the last live stream. Not many trades happened, right? Nothing much was happening. We did have some movement. It was not that impulsive. I didn't see much high probability price action. And then we started to see some high probability price action right here. Okay, so I was definitely looking at this to take some buy setups. I did like, you could make a case that a V reversal pattern happened right here. I wouldn't really say it's a clean one. I wouldn't really focus on it. I wouldn't really say it's a big confluence, but it's there. It's not that big. If it was bigger like this, then it would be much more high probability. This one was pretty small. But what I did like is the impulse, right? I did like this impulse. I was looking for flag setups right here. We had the Zentum call yesterday. It was 6 p.m. London time, and we were talking that we were looking for a buy setup right here. Okay. We were discussing this trade live. A flag didn't form in the end, but we had a break and retest or a continuation. So it's the same thing, different name. Whichever name you prefer, you can use. I sometimes say break and retest and sometimes continuation. But basically, I like the momentum. I like the push up and a little bit of a pullback, a little bit of a shift in momentum right here. And the break of the high was not that convincing. So the break of the high was not that big. Also, price action was pretty flat, pretty corrective, pretty range bound. So you need to weigh all of the pros and weigh up all of the cons and then make a decision. Again, it's not a black and white thing. You cannot say there is three positive signs and two negative signs. Doesn't work that way. Trading is more of an art than a science. So you need experience, and then experience will guide you through the positive signs, through the warning signs, and it will guide you on how to make a final decision. How to gain experience? Backtesting, live trading. Those two things. First backtesting, then live trading. Live trading is great for experience, but of course you do not need to risk a lot because you're going to blow up. But if you have a small account, risking a minimum lot or 100 or not 100, but like, I don't know, $20-$30 per trade, that's okay. So Aussie Japanese yen, what are the positive signs? Impulse, pullback is small, break of the high. I would say the impulse is the positive sign and maybe this V reversal. Negative signs, price action. I mean, overall price is range bound, it's flat, it's corrective, it's not looking good, it's not coming from any significant high probability pattern, okay? So price action overall is pretty shitty, pretty bad. A bit of a warning sign, and another positive sign was that it was Wednesday. Okay, usually the best trending entries come from Wednesday, Thursday, and Friday. Mondays and Tuesdays are a bit more corrective days and not the best to be taking trending entries. But since it was Wednesday, that was a positive sign as well. Now the negatives, price action, shit. Pullback, big red, not big red candle, but a soft shift in momentum, you could say. So it's not a clear, like, large red candle like this, but it is still showing me some weakness and it's a bit of a warning sign. And the next warning sign is the break that is not that big, just the visual assessment of the break like this. I'm not really going to measure it, but just the visual assessment, it's not really that significant of a push, right? Not that big. This candle by itself, not that big. If an impulse came from this candle, for example, like this, then that's a different story. I would say that is a significant break, a significant move, but that did not happen. Instead, we had a bit of a trickling move up. So you could have placed the trade, a pending buy limit. 20. Yeah, 20 pips is okay. You would have gotten in. You would have actually been running percentage. And then according to our trade management, you would have moved your stop loss underneath this low. and you would have been taken out by this red candle, and this would be a break-even trade. Okay. I know Nico took it, Ruben took it as well. Those are my two trading colleagues. Griff didn't. He's the third trading colleague. Or I think he didn't. I'm not sure. But I didn't. Basically, I wanted a bit more. So that's it for this trade. Currently, this is not looking good. It's not looking good. It's moving from an ascending structure into a descending structure. So that is a sign of a bigger range-bound market. It's not showing me any high probability patterns. It's showing me corrective price action. It's not going to go on the watch list. And I just want to see momentum. I want to see a large push up or a large push down like this. Right, that's going to be on the radar. That is what I want to see for the Aussie and the Japanese yen. The next one is going to be the pound US dollar, which is going to be pretty interesting. We had some massive movement on the pound, starting from, I don't know, this level, let's say, starting from Tuesday, 8 a.m. This was like a minus 2% move, and that is pretty big. That's a pretty significant move. Were there any major news events? Let's see. Powell speech, okay. Job openings, ISM manufacturing PMI. I mean, these numbers are pretty, okay, this number is pretty big compared to the forecast, but it's nothing that stands out. I don't think these are very volatile news events. And then there was PMI, which was just a little bit of a bearish event, nothing significant. So no real news in the most recent price action that I can spot. So probably some bigger forces are in play because we have been trending up for a while, right? We have been steadily going up in these legs. And now the market has shifted a little bit. The sentiment has definitely shifted, and we're now in a bearish market for sure. Definitely in a bearish market. Ryan says, so you only take trades when the price action is ascending or descending, or if it impulses out of a range. So no, I take trades from a lot of different scenarios, but I prefer, and my best trades come from ascending channels, descending channels, or a strong trending market. What is a strong trending market? It's this right here. This would be a strong trending market. Just some major bearish momentum, major legs. So this would be I would classify this as being very high probability price action. An impulse out of a range. So a scenario like this, flat range and then a push up, it's not that high probability. If an entry were to form right here, I would have maybe taken it depending on how the impulse looks and how the entry looks. If there are zero warning signs in the actual entry, in the actual impulse and the entry, I will take that trade. But if there is warning signs right here, I will not take that trade because it's coming from pretty shitty price action. It's coming from a flat range. And that is the exact reason why I didn't want to take this AJ trade right here, because I was seeing some warning signs, as I just commented. So I was seeing some warning signs right here, but we were coming from shitty price action as well. So warning signs plus shitty price action, it's not a good story. It doesn't end well. If, for example, if this came from a very clean descending channel like this, I would have taken this trade because then the price action would be high probability. Or if this came from a very strong trending market, I would have taken this trade as well because the price action would be very high probability. So shitty price action, I don't want to see warning signs in the entry. High probability price action, I can tolerate some warning signs in the entry. But if the actual impulse and the entry is very is looking very clean, I will ignore that the price action is shitty and I will take that trade. So it's not exclusive. It's all a balance. It's all about It's all about looking at the positives, looking at the negatives, and then coming to a decision, which is going to be pretty discretionary. I mean, it would be very tough for me to put my criteria into a computer because I have trained myself to look for patterns, to look for visual patterns through a large amount of backtesting and a large amount of live trading experience. So my mind is trained to look for specific patterns and to avoid other patterns, right? So it is tough for me to put that into words or put that into parameters that you can program into a computer. So it's all about experience. And that is why you cannot say there are, I don't know, 3 positive signs and 2 negative signs, so I'm going to take it. Doesn't really work like that. You need experience. Again, how to get experience, backtesting, and live trading. So it's all about training your mind, right? Training your mind to spot high probability patterns. hope that answers your question. So pound US dollar, let's go back to Wednesday. We were pretty flat. We were doing nothing right here. Okay. Pretty flat and doing nothing. Then we started to move down. Very nice momentum. I was definitely looking for sell setups. This was already, for me personally, in an established downtrend. Unfortunately, no high probability setups formed. We had a flag form right here, but this large double wicks plus a big shift in momentum, it is definitely not high probability enough for me to look for a setup. Okay. Definitely not high probability enough for me to look for a setup. This was just too big of a warning sign right here. Yeah, no worries, Ryan. No worries, Ryan. So yeah, right here, just seeing too much buying pressure, and that's too big of a warning sign. We had another drop, another nice pile of bearish momentum. As I said, this whole price action seemed very high probability in my personal opinion. I definitely liked what I was seeing. This large move down, bit of a pullback, another breakdown. And I was definitely looking for sell setups, but nothing formed. I have 2 main continuation patterns that I trade. That is going to be the flag, and it's going to be the pullback break of the low retest. But they did not print, unfortunately. Instead, we pulled back, broke the low, double wicks, retrace, broke the low, large wick, retrace. This is looking more like it's descending. So not good. I'm not really going to put this pair on the watch list. Maybe this would be a nice opportunity for a tight reversal pattern like this, and then you basically execute a buy setup right here. So you would need to see a nice large push up like this. But I do not trade reversal patterns on the pound and US dollar. I first wait because they don't work on a large sample size. They don't work as well as on the other pairs. I would prefer to see a nice push up and then a setup, right? Not just a straight 1 candle push and then a retest of the high. But that is a bit more advanced. So basically, this looks like it's going to go up on the short term. It's kind of, it was losing steam. Now it's printing some bullish pressure. What I would need to see for a high probability buy setup is a nice large push up and then a buy setup like this. Okay. And I'm going to put it on the watch list because this whole price action is moving pretty clean. It's pretty interesting what is happening. I'm definitely seeing some clean movement. There was even a trade you could have taken here, but it was definitely not high probability in my opinion. So you had a push down, pullback, no buying pressure, break of the low, but then a wick. So you could have done this. You could have placed a sell limit on the low of this inside bar. Then you would be tagged in on the next candle, and then this would be a nice winning setup. If you can spot it right here. So basically it would continue dropping down, but definitely seeing too many warning signs in this price action. You have the not that big of a push, double wicks, Wick on the bottom, wick on the top on this candle. So this candle formation is definitely more indecisive than it is bearish. If this had a clean close, maybe I would have taken it. It was Tuesday, so I'm not sure. I'm not sure I would. But with the wick on the bottom, it's definitely not good enough. So if we can get a large push up and then a nice tight flag like this, let's say like this, I would take it. I would take that trade. Even better, what works even better on the pound and the US dollar, if we can get a nice push up, pull back, break of the high, retest of the high, that would be very high probability, and I would definitely be looking for a buy setup. Charles, what's up? How are you doing? So Charles asks, are double wicks a definite warning sign in the price action? Yes, they definitely are, especially if they happen close to the entry area that you're looking at. So you can see the double wicks right here. It's definitely not looking good. I think we also had an example on the euro and US dollar with double wicks. Let me see. Yeah, right here. You can see double wicks, retrace, double wicks, retrace. So it's a pretty big warning sign, and I definitely don't like to see it. I definitely don't like to see it. You have double wicks here as well. So it is a sign of a range bound market or a complete reversal. What it is not a sign of, it is not a sign that the bearish, for example, in this case, that the bearish market will continue, right? If you see this, you see a nice downtrend, very nice downtrend right here. Big push down, pull back, big push down, but then you get large double wicks on the bottom. It is a sign that the market is most likely not gonna continue dropping. So most likely this will not happen, unfortunately. Okay, see now it is breaking the high, so that is interesting. If this can continue up with force, I would look for a buy setup. Moving on to our final pair that I live trade, it's gonna be the New Zealand and the Japanese yen. Okay, so NJ 1 hour chart, extremely corrective, just very corrective. I was not seeing. Okay, I was seeing. Yeah, no worries, Charles. From last Wednesday, right here. So basically, just nothing much. Here we had some interesting price action, but then it kind of fizzled out. So nothing happened in the end. Just a lot of volatile movement, lots of up, down, up, down. That's not what you want to see. That is not decisive. That is not showing us a clear direction. Then a large drop. This was a news. Yeah, this must have been some sort of news. Let me see if we can spot it on the euro and the US dollar. So it was 27th of September, 7 in the morning. 27th of September. Okay, so the euro had the inflation rate, and there was PCE, personal spending. Yeah, not sure. Doesn't really matter. Again, I mainly focus on the chart. I only focus on the chart for making trading decisions. So I only focus on what the chart is telling me, and it was telling me that there was a large drop, but it could not be sustained. So the market did not continue dropping down. Instead, it retraced, and then it started printing a really wide flat range. The only area I was looking for a trade was right here. Okay, only this area was interesting to me. It had an okay push. This was some okay momentum, nothing to write home about, but it did have some buying pressure. The problem was overall price action was pretty shit, very flat, very corrective, very range bound, so not something I want to be involved in. Maybe I would have taken a break and retest setup if we could have broken the high with a lot of force like this and had a nice clean close. So if we had a nice big blue candle, nice big bullish candle, maybe I would have been happy to look for a retest like this. That didn't happen. Instead, I believe we just broke the high, retraced. Yeah. So we just broke the high, retraced, broke the high, double wicks, retrace. See, major warning sign. Sign of a range or a complete reversal. And look what happens next. Range bound market. So this pair is definitely not going to be on the watch list. And I'm just looking for a large push up or a large push down like this. I want to see price action cleanup. This is not good. It is the same as the Aussie and the Japanese yen. It is just moving from an ascending into a descending structure. Let's zoom out a little bit. See the overall story. Okay, interesting. 4-hour daily. So the daily is kind of printing a cup and handle. This will be the cup. This will be the handle. And if you are not familiar, that is a bullish pattern. Okay. That is a pattern where in most cases this happens, right? So I don't really look at the daily chart for my trading decisions. It's just fun to take a look. I only focus on the 1-hour chart to execute setups and to make trading decisions. Okay, so that is kind of done for the live trading part. So these are the currency pairs I trade live. But for the live stream, I'm gonna do some important instruments that are that kind of move the market, not move the market, but that everyone looks at. So of course the S&P. I'm not gonna do the 1-hour chart. I'm gonna do the daily chart. Why? Well, because it's cleaner. It's cleaner. The 1-hour chart on the S&P is pretty bad. See, super choppy, super wicky, super choppy, super noisy. It is not something I want to trade. I did backtest it, didn't find much success. So I'm going to do the whole analysis on the daily. And it's looking pretty bullish. Again, look how we recovered. So we completely recovered this major bearish market. We just shot up, pulled back, shot up again, and now we are in all-time highs. I believe we are. So we broke this major high, and now we are hovering right above it. So that is pretty bullish. And I would say that more upside is very likely to happen, right? I know a lot of retail people, when they see this chart, they say this is going to go down. They're saying it's overextended, overbought, it's going up for too long, it needs to correct, it needs to do this. Okay, that is what most retail traders are thinking. Usually, what the retail traders are thinking, the exact opposite happens, right? That is just what happens in most cases. So if the retail is bearish, you should be bullish. And that is what you can use as an indicator as well. You can build an indicator. I know Trader Nick did that sort of a thing. So he basically has a sentiment for the retail traders, and whatever the retail traders are thinking, he is thinking the exact opposite. So if the retail traders are bearish on the S&P, he is bullish, and he knows that buy setups are more likely to work out. So that is pretty interesting, I would say. It all has to do with market psychology. Also, there's the commitment of traders data report. If you don't know what that is, Google it. So COT report, commitment of traders. That is where all the professional traders release their statement of if they are bullish or bearish on specific instruments. And most times they are right. So if the commitment of traders report is bullish on the S&P and the retail traders are bearish on the S&P, that is a big sign that the S&P is very likely to go up, right? Because you want to follow the professionals and you want to do the exact opposite of the retail traders. So I just thought that was very interesting. S&P is bullish on this daily chart. Not that impulsive, but I think it definitely has more steam to go up, to trickle to the upside. Okay, NASDAQ, pretty bullish as well. It is printing these V reversal patterns, which are bullish patterns. Usually when you get a V reversal, price action goes up. So I would say it's bullish. I would say we can expect more upside. Gold is looking very good. Gold is looking very, very good. I did comment on this in the last live stream as well. So here we were pretty corrective. We were breaking the highs and just leaving wicks, just retracing. So it was not really a good high probability story. But then we just broke out. We got a lot of momentum right here, and we got even more momentum right here. So very good, very bullish. I don't see any signs of gold slowing down, and I'm expecting more upside. Let's go to the 1 hour, check it out. Was there any interesting entries right here? There was a break and retest here. Other than that, no real high probability entries on gold, unfortunately. Now we're pretty flat on the 1 hour, but your focus should be the daily on gold, and it is pretty bullish. Okay, silver getting there as well, looking more bullish every day, approaching the major high. It did break it, and then we retraced, as we can see right here. So broke the high, retraced. Not the best, but again, the reaction was not that significant. So silver usually follows gold. If gold can continue, silver will most likely continue trending up as well. But gold is much more interesting. Bitcoin tried retesting. We're kind of in a channel, right? See, this is a channel formation. We definitely retested this trend line, which is pretty funny because it was just so clean, such a clean move, right? Retested it and then dropped. Not really a bullish sign. So I'm not that bullish on Bitcoin. We're definitely not getting the bullish reactions that we want to see. What I'm waiting for is this sort of a market, right? This current market not looking the best, slow, range bound, corrective, flat. So not really interesting for Bitcoin right here. It's not looking that good. With Bitcoin, you want to see activity, you want to see it being mentioned in the news, you want to see everyone talking about it, you want to hear your grandma say, oh, today or this morning I read in the newspaper about Bitcoin, how it's going up. That is exactly what you want to hear for some activity to happen. Like bullish, bearish activity doesn't really matter. This is what you don't want to see. Just flat, very corrective price action, and Bitcoin not being in the spotlight. If Bitcoin is not in the spotlight, it's not that good for Bitcoin. Bitcoin really needs to be in the spotlight. Okay, Ethereum, very bearish. Ethereum is even worse than Bitcoin. It is definitely very bearish. Let me check out the high. So what is it now? From the major high, minus 43%. That's pretty big. That's pretty significant. So Ethereum is not holding up that well. It is very bearish, I would say. DXY. Now the DXY is pretty interesting. It is reversing from a descending channel, right? So you can kind of interpret this as a descending channel, as the lows are being broken pretty correctively. See right here, right here, right here as well. So pretty corrective movement on the DXY, not the best. I mean, not. It's a good pattern for the price to go up. Okay, so it is a good pattern for the price to go up, and that is exactly what we're seeing right here. Price is trying to push up. It is succeeding as well. It is printing some major bullish candles. So what does this mean? What does the DXY going up mean? What does this pattern mean as well? This is a bullish pattern. It is a descending structure. Usually this happens. You get a nice uptrend. The DXY going up means that the dollar is gaining strength and that the dollar pairs will start to go down, right? So if the DXY is going up, EU should go down, Aussie US dollar should go down, pound US dollar should go down as well. And you can see that, see this move, bearish, bearish. Aussie US dollar didn't have a big reaction, but it's all connected. And the DXY measures the strength of the US dollar. I have to say this is very clean price action, and I would expect more upside. That is what the technicals are telling me. They're telling me this wants to continue pushing up. So that is interesting. That is good as well. I don't mind the markets going up or the markets going down as long as they're doing something. If they're flat, I cannot make any money. If they're going up, I can buy. If they're going down, I can sell. So as long as there is movement, I'm good and I can profit off of that movement. Only thing I don't want to see is, let's say, this very big stagnation period, very big flat period. When was this? Okay, this was on the daily chart, so it's not that bad. But if we can do this, it's going to be very good for trending entries. It's going to be very, very good for trending entries. Okay, and the last one is going to be the US oil. We always take a look at US oil as well. If you guys have any questions, definitely put them in the comments. I answer every single question. Any chart analysis, trading related, psychology, prop firms, so anything you want, we can cover it. But US oil, this is just a pretty corrective chart. Pretty corrective chart on the daily. Let me just see the DXY on the 1 hour. Yeah, it's looking pretty bullish. US oil, I just could not make a decision, to be honest. It is kind of moving in this sort of a descending channel, maybe like this, sort of a descending channel. Then a breakout is happening, but it's not clean price action. So I cannot really make a decision right here. I think it's pretty messy in this area. So I'm just going to leave US oil alone. I'm not going to give a bias. Okay, just a quick run through our pairs. Okay, Gabriel has a question. What is your opinion about ICT? Well, I mean, he does have some very interesting concepts, but the guy is clearly not a trader. He's a marketing guru, right? Because he did enter the Robbins Cup a couple of times now, I think 2 or 3 times, and each time he blew his account and just didn't make any profits. So if you want to learn how to trade, I would stay away from ICT, SMC, those sort of concepts. I do trade something that like is considered maybe an SMC entry, but again, I connect it with my knowledge so far, so I don't just blindly buy or sell according to an ICT concept. I kind of connect that concept with the liquidity sweep with my current knowledge of price action, and that makes sense for me. I do know, or at least I've seen a couple of traders using ICT. Apparently they're profitable, but I've never seen a track record of any ICT trader. So my advice would be to just focus on what is proven and what works, to basically learn from someone that has a track record. Okay, so I have a track record. It's on my FX book. I have a video about it. It's on YouTube as well. I know Sam KB has a track record as well. Trader Nick has a track record. Tori Trades, I believe she has a track record as well. So what you need to do as a beginner is find someone in the space who can show you a track record, who can show you that they can make money in the markets, and then learn from them. Just learning from the most popular guy on YouTube, which is going to be ICT, I don't think it's going to yield too much success, because the guy is he's not trading. And most of the marketing gurus, if not all of them, are not trading live. They are making all of their money from the courses, from YouTube as well. and they are just demo trading, I guess, or I don't know what they're doing. So that's my opinion on it. Always learn from someone who can show you verified results, who can show you a track record. If they can't show you a track record, then they cannot make money from the markets consistently, because why would they hide their track record? I mean, they can tell you, oh, it's personal, I don't want to show it, blah, 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 blah. But I mean, it doesn't make sense. It only benefits them if they show a good track record. So that's about it for that question. Hopefully that clears it up. And yeah, a quick run through. Charles says facts. Yeah, facts for sure. A quick run through the pairs. Still descending. EJ still corrective. AU corrective. AJ corrective. Pound US dollar not committing up. We're not getting that big break that I wanted to see, unfortunately. So it looks like it's gonna be range bound in this area, and NJ is gonna be corrective as well. So if there are no more questions, this about covers the live stream. Thank you guys very much for watching. It has been pretty active this time. We have gotten a lot of comments, a lot more than I usually get. So I think this Thursday at 6 p.m. works very well. And I'm going to think about continuing this sort of a schedule. So every Thursday at 6 p.m., we're most likely going to have a live stream. Thursday is good. There's a lot of news events as well, which is pretty nice. The markets are the most active on Thursday, I would say. So you can expect more live streams on Thursday. I will update you on that if you want to follow my updates. Everything is on Instagram, okay? So you can go to the description of this video, find my Instagram account. Let me just see what is the tag. What's my tag? Okay, it's Marcos Trading Journey. Okay, so it's in the comments. That's my Instagram account. Follow me on there. All of the updates are given there. Time of the live stream, topic of the live stream, and everything like that. If you want to learn how to trade, well, definitely go to zentumtrading.com. We have a free Discord as well. You can ask questions, but we do have a paid section where we bring you from zero to becoming a consistently profitable trader. So yeah, thank you guys very much for watching. Good luck tomorrow. Let's see what NFP brings, and I will see you in the next live stream.